Hi everyone, and welcome to this special episode where we will talk about the US IPO market that's just about to heat up with technology's most exciting and most promising names looking to go public. Among them, SpaceX, OpenAI, and Anthropic. These companies are all expected to get listed in the coming months in the US, and they will be ranked among the biggest IPOs of all times. So the excitement is mounting. These companies are not simply selling products, they are selling the future. And understandably, everyone, or at least many people, want a piece of them. But at what cost and at what risk? Because eye-watering valuations and extraordinary success stories mask cash-burning machines and raise questions regarding the ability to sustainably generate profits. So we will talk about all that and more, but before we do, and as always, please keep in mind that opinions are my own and this is not financial advice.
This show is brought to you by Swissquote.
So let's cut to blah blah and start with SpaceX. For years, SpaceX was one of these mythical private companies. Ordinary investors couldn't touch it. It became the symbol of Silicon Valley's ambition under the very Elon Musk, who is willing to build reusable rockets. He wants to colonize Mars, who has these Starlink satellites and now AI infrastructure in orbit kind of dreams. But while Elon Musk has crazy ambition to colonize the space, well, the real engine of SpaceX today is not rockets. No, it's not. It's connectivity. Starlink, it is great. It actually does generate billions of US dollars in profits and has effectively become the company's financial backbone, the one that allows to finance the other and the cash burning departments of the company, as the traditional space launch business, for example, continues to consume enormous amounts of capital. At the same time, SpaceX is increasingly transforming itself into something much broader than just a launch company or a connectivity company. It wants to build orbital AI computing infrastructure, space-based data centers, lunar industry, and long-term Martian settlements. Because the economics of AI are becoming terrifyingly expensive, training large AI models now requires gigantic amounts of electricity, cooling systems, and semiconductor capacity. And the AI revolution is now colliding with real-world physical constraints, power grids, energy availability, and chip production bottlenecks. Obviously, Musk's answer to the worldly problems is radical. If Earth cannot provide enough energy and cooling capacity efficiently, why not move part of the infrastructure into space? Well, this is crazy exciting, but it's also crazy dangerous. Now, from a technological perspective, the idea sounds visionary. From a financial perspective, however, it sounds terrifying. SpaceX itself admits in its IPO filing that many of these concepts may never, ever become commercially viable. And while the company actually reported an operating loss of 4.9 billion US dollars last year, and this year is already down by 4.3 billion US dollars. And that matters somehow because investors will not be financing proven businesses with SpaceX when they will opt for SpaceX stocks. If they do, they will be financing a massively speculative and incredibly expensive infrastructure that is, in best case, decades ahead of potential profitability. And well, Elon Musk will have around 85% of the voting rights in the company, meaning that investors will directly put their money into Elon Musk's hands. So it may not be everyone's cup of tea in terms of risk. Elon Musk is certainly the world champion for selling the craziest ideas to the entire world, but when it comes to profitability and concrete financial results, well, it's quite another story. Now let's move to OpenAI. If SpaceX represents the physical infrastructure of the future, while OpenAI represents the cognitive infrastructure, ChatGPT actually did change the public perception of artificial intelligence almost overnight since January 2023. Suddenly, AI stopped feeling theoretical and became a mass market product. And that's a huge success story, and OpenAI now sits at the very center of the fastest technology adoption cycles in history. That's not just exciting, that's extremely exciting. But behind excitement lies an extraordinary financial reality as well. Because AI is unbelievably expensive to run, investors should be made upfront. OpenAI must spend aggressively on chips, on data centers, cloud infrastructure to offer its services, and revenues are rising. Yes, they are, but they're not rising at the same speed than the rising spending. That means that OpenAI will lose tens of billions of US dollars before becoming sustainably profitable. And this is what makes investors a bit worried, I would say, because the path to profitability is still filled with risks, among them insufficient or slowing revenue growth in the future, somehow the inability to finance debt, and rising competition. Because lately, OpenAI started sharing its cake with Anthropic, and that reportedly resulted in missed internal targets at OpenAI. A bit worrying for a company generating roughly 20 billion US dollars in revenue per year while facing potentially hundreds of billions of US dollars and possibly over 1 trillion US dollar in long-term AI infrastructure and compute commitments over the coming decade. And it's said that OpenAI is burning around 10 billion US dollars a year. And this brings me to Anthropic, because the latter, the House of Cloud model, positions itself as the go-to model for AI developers and also governments in terms of security and military applications, is now the new rising star. The company has been releasing AI models ones after the others that disrupted the established software companies' businesses. As a result, the software companies are being sold off like there is no tomorrow for them, and we can argue that part, and maybe a large part of that funding, of that money, should flow into Anthropic, as its AI apps are aiming at the businesses of these software companies. The problem is, Anthropic is also burning cash right now, and it has, as OpenAI, huge, but absolutely huge investment in chips, data centers, and AI infrastructure to keep running and keep growing. And because the amount needed are massive here, both OpenAI and Anthropic rely on investments from big technology firms like Microsoft, Amazon, Nvidia, or Google, who then sell their computing power, their chips, and their other infrastructures to these companies. As a result, these companies have to pay these big technology companies back, and to do so, they should bring money in from outside their circles. Turning in circles will not be enough if revenue doesn't show up. So this is the real issue today. Everyone agrees that AI is revolutionary. Everybody knows that this is something big, but nobody truly knows where the profits will ultimately settle. The fact that SpaceX, OpenAI, and Anthropic are startups, and the fact that they're chasing businesses that did not exist a few years ago or that simply do not exist yet, and the fact that all three of these companies are burning cash at an impressive speed, and the fact that they do have jaw-dropping valuations obviously raise a few questions. How will AI evolve? Will the profits go to model creators like OpenAI and Anthropic? Or will they flow to chip makers like Nvidia and AMD, or cloud providers like Microsoft, Amazon, and Google? Will SpaceX go to the moon and to Mars and colonize there and have profitable business there? Will these companies ever become profitable? Or will they become profitable before they face competition? Will AI eventually become commoditized, compressing margins across the industries? Will investors ever see stable and sustainable return on their investments? Are these companies cheap today? Are they expensive? Is this a bubble or a huge and once-in-a-lifetime opportunity? Could macroeconomic conditions become a drag at some point in time when global yields are rising, governments are heavily indebted, energy systems are under pressure, and geopolitical fragmentation across the world is increasing? No one knows the answers to these questions yet. What we know, however, is that these IPOs could become historic wealth creators, but they could also become symbols of excess if expectations detach too far from economic reality. The future probably belongs to AI and advanced infrastructure, but even the future can become overpriced sometimes. And when companies are overpriced, the pullbacks could be sizable. So getting the story right is not enough. Investors also need to get the valuations and the timing right. And that's always the hardest part for this kind of companies, because traditional math, comparing revenue to investment and debt, is very, very difficult when it comes to this kind of companies that could go to the moon, literally to the moon, or fall back on Earth. So Time will tell. Let me know what you think about it. Would you buy these stocks when they become public or not? Or would you just avoid them? I'm very interested to know indeed. But this is all for today. I'm İpek Özkardeşkaya, and thank you for joining me, and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below as usual. Follow us on Instagram, on X, on LinkedIn, but also on WhatsApp, Threads, Telegram, and Blue Sky for regular market updates. Subscribe to our YouTube channel for daily market comments, and please do not forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow, and until then, good day trading.
Trading and investing carry risks, including capital loss. CFDs in digital assets are volatile and not suitable for everyone. Swissquote assumes no responsibility for accuracy or losses from its use. Products and services are offered only where legally permitted.